Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong level of monthly demand and support. In fact, from here, all this previous move to the upside was created. At the moment, the market is testing exactly the same zone from which there is definitely the possibility to see some bullish price action being created. We can also notice how we have a quite strong impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, what we can see is that we have the 0.618 and 0.786 Fibonacci retracements, so two quite important Fibonacci retracement levels lining up exactly with this previous level of support and demand, which is currently still acting as support and demand, therefore creating a confluence of support exactly inside of this zone, which we could expect this market to potentially reject to the upside. We can also notice that from a pattern perspective, if we look closely, we can notice how first the market created a push lower, correction, lower low, equal high, another correction. And when you see something like this, so impulse correction, lower low, equal high, and a correction, this is the creation of an inverted head and shoulders. From here, you would expect a push higher, which at that point would create this inverted head and shoulders. So from a monthly standpoint, this is not only a confluence of support zone, but it is also a level at which if we get a push higher from here, we would have the creation of a bullish pattern. So on the monthly, everything seems quite bullish. And keep in mind that instead of a confluence of support zone, you would expect to see more institutional longing, which at that point would further increase the probabilities of a potential push higher away from the zone. And we will be speaking about institutional longing in just a few minutes when we move to the order flow by looking at the commitment of traders for this pair. For now, let's drop down on the weekly time frame and see what we have. Now, from a weekly perspective, the situation is quite different. In fact, we can notice how currently we still have resistance at this zone. This level was previous weekly resistance, turned support here, here, and here. Now the market broke below that zone, and currently it is testing it as resistance. So we could expect some short-term correction to the downside and rejection of this resistance. But overall, if the monthly pattern is to be completed, the market will need to break above this zone. So we could expect, at least in the very short term, some bearish price action. But overall, if the monthly pattern is to complete, we need to get a break above the zone. Obviously, if the market wants to complete such pattern. Dropping down on the daily time frame, what do we have? Now here on the daily, we have yet another pattern which suggests the possibility of seeing some short-term bearish price action. In fact, we notice how we have the creation here of this daily W formation. And in general, when you have the creation of a W, what you would expect is a potential push lower for the completion of the W formation at the neckline, which is the previous resistance turned support, and then to see the continuation to the upside, completing this potential daily impulse correction and impulse pattern to the upside. So the pattern here on the daily aligns perfectly with what we have on the weekly. So the possibility of a rejection of this short-term resistance on the weekly and then a break above it. So short-term bearish price action and then longer-term bullish continuation. Now, I also spoke about AUDUSD just a few days ago when the market was around this level and explained all the reasons for which we could expect this rejection to the upside away from the level. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. Now, before we go into more details on what we have here on the daily, first, let's go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing. Now, before we speak about this, it's important to point out that if we're looking at the AUD, actually already we're looking at AUDUSD because all currencies on the spot are traded against the USD. And what we can notice is that with the last reports, in the long term, net positions are starting to get increased. We went from minus 107.5k to minus 101k net positions. So institutions in the long run are starting to shift back to the bullish side of the AUDUSD after being bearish on it for quite some time. And that is no surprise that the price action has been quite bearish lately, since institutions clearly were decreasing their net positions. Now they're starting to increase them once more. So that is why the market is now starting to continue higher. However, with the last report, we once again start to see some slight decrease in the net position. So once again, the COT data is aligning with what we have from a technical perspective, because we could expect some short-term bearish price action and longer-term bullish continuation. Now, let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked here on the screen and also linked in description, so you never miss new updates. Now, back to the analysis. Here on the daily, what do we have? Now, as I was saying, from a daily perspective, we have the possibility of seeing some short-term bearish price action before then seeing the continuation higher. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, at that point, I wouldn't be surprised to see a potential push lower, completing this W formation at the neckline. And then from there, yes, there is the possibility of seeing a push higher. But first, this push lower, rejecting that weekly resistance, I definitely would not be surprised if the market would create it. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I'll see you in my next breakdown.